This semiconductor stock just hit a 20-year high, and most investors still don't know it exists. Meet Tower Semiconductor.
The big question we're tackling today is, could this be the AI boom's best-kept secret? This is the number that got everyone's attention, a jump of roughly 15% in a single day, right after their earnings report. Look, a move that big doesn't just happen by accident. It signals a major shift in how the market is thinking about this company. And get this, the stock just hit its highest point in over 2 decades. And yet, if you asked most investors about it, you'd probably just get a blank stare. It's a total unknown for so many. So what in the world is really going on here? This is the chip market. We're here to cut through the noise and decode what's happening in semiconductor investing so you can make smarter decisions. Okay, so first up, let's dig into the breakout itself. What exactly was the catalyst? What lit the fuse on this sudden, really explosive move? Yeah, that's the core question we're going to answer today. We're going to unpack who they are, what they do, and more importantly, why Wall Street is suddenly paying very close attention after years of this company just flying completely under the radar. To really get what makes Tower special, you first have to understand where they don't compete. This isn't just another company chasing after the latest and greatest digital chips. Nope. They are an analog specialist, a true underdog with a totally different playbook. So here's the key difference. You've got the giants, like TSMC, locked in this brutal, expensive race to build the 3-nanometer digital brains, the GPUs and CPUs. Tower, they're focused on the essential plumbing. They make these specialty analog chips that handle things like power, connectivity, and sensors. They're the components that connect the digital world to the real world. And honestly, the whole system just falls apart without them. So why was this company so overlooked for so long? Well, for about 18 months, it was basically in a state of suspended animation, waiting on an acquisition by Intel that never happened. And when that deal finally fell apart, the market pretty much left it for dead. But here's the twist. With a cool $353 million breakup fee in its pocket, Tower staged this incredible comeback, soaring way past the original buyout price. It's a true phoenix rising from the ashes story. Okay. Now, this is where the story gets really compelling. Let's connect the dots between this quiet, analog chipmaker and the absolute explosion that is the AI boom. Seriously, think about it for a second. An AI data center isn't just a pile of GPUs. It's this massive, incredibly complex, interconnected web. So how do you move staggering amounts of data between thousands of those chips, basically at the speed of light, without creating insane bottlenecks? Well, the answer isn't electricity. The answer is light. We're talking about something called silicon photonics, or SiPho for short. This is the technology that basically creates an ultra-fast data highway inside the data center using photons instead of electrons. It is the absolute critical enabler for the massive scale of AI, and you guessed it, Tower Semiconductor is a key player in manufacturing these components. And if you want proof, here it is. The company is expecting its silicon photonics revenue to more than double in 2025. So let me be clear. This isn't some fuzzy theoretical link to AI. This is a massive, tangible growth engine that is firing on all cylinders right now. Now, let's get to the hard numbers. The whole AI thesis is great, but it was the company's recent earnings report that delivered the undeniable proof that this growth is not just real, it's accelerating. So in Q3, they posted solid numbers across the board, but the real story is that bottom line right there. RF infrastructure revenue, which is where all this silicon photonics stuff lives, exploded by nearly 60% year over year. That is AI demand showing up loud and clear in their financial results. But this is what truly shocked the market. Their guidance for the next quarter is $440 million, an all-time record high for the company. That kind of double-digit growth from one quarter to the next tells you that the momentum here isn't just strong, it's getting stronger. And hey, you don't just have to take my word for it. The CEO said it himself, plain as day. Extreme AI-driven data center demand is fueling unprecedented growth. I mean, the connection could not be any clearer. So the growth story is obviously super exciting. But smart investing means looking at both sides of the coin. It's not all sunshine and roses. So what are the risks here? Well, there are 4 key things to keep an eye on. First, execution. They're spending over $650 million to expand capacity, and they absolutely have to deliver on that. Second, the chip industry is famously cyclical. If AI spending cools off, that's going to hurt. Third, their margins are getting better, but they're still under some pressure. And finally, after that huge run-up, the stock is not cheap anymore. The market is pricing in a lot of good news. So when you put it all together, what you have with Tower Semiconductor is a classic asymmetric bet. The risks are very real. You've got high execution hurdles and a premium price tag. But the potential reward? It's finding a key undiscovered winner of the AI revolution before everyone else catches on, which could lead to a massive long-term re-rating of the stock. And that leaves us with the ultimate question for any investor looking at the story. Is this breakout just the beginning? Are we watching the very early innings of a major re-rating for what could be the next great overlooked growth story in the semiconductor space? Thanks for watching. If you found this helpful, do us a favor and don't forget to like, share, and subscribe to the Chip Market. We're here to turn semiconductor news into smart investing insight. We'll see you next time.